There is something most Australians don't realize. You can legally build serious wealth inside superannuation and potentially pay as little as 15% tax, and in some cases even 0% tax in retirement. Not offshore, not in Dubai, right here in Australia, and you can do it legally. And right now, one of the biggest trends I'm seeing is people wanting to invest in crypto inside their self-managed superannuation fund. Bitcoin, Ethereum, altcoins, but here's the reality. Most people are doing it wrong, and they don't even realize it. I'm talking audit issues, compliance breaches, and ATO reporting. So today, I'm going to walk you through what you must know before you even think about crypto in your SMSF. Let's start with the biggest mistake. Your SMSF is not you. It's not your money. People think, I already own crypto, I'll just move it into my SMSF. You cannot do that. Your SMSF is a completely separate legal structure. That means separate bank account, separate ownership, and separate records. If you transfer personal crypto into your SMSF, that's a breach. And yes, auditors pick it up. If your SMSF wants to invest in crypto, it must buy it itself using its own bank account, and it must be held in the name of the self-managed superannuation fund. It's a simple rule. If the fund didn't buy it, it shouldn't own it. Now let's talk about ownership, because this is where things get interesting. Crypto is not like shares. There is no registry, no CHESS statement, no single source of truth. So the real question becomes, who actually owns the asset? And this is where people get caught, especially when they use exchanges and brokers. You need to be very clear. Is the SMSF the legal owner, or is the exchange holding it on your behalf? From a compliance perspective, the account must be in the name of the SMSF. The SMSF must be the beneficial owner, and there must be a clear audit trail linking the asset back to the fund. If you use a cold wallet, how do you prove that the SMSF is the owner of these coins? Most wallets do not allow you to add a name on the account. If you mix personal and SMSF accounts, or if ownership is unclear, auditors will question it. And it becomes a compliance issue very quickly. In practice, we often need exchange statements, wallet details, transaction histories, and supporting trustee declarations. These documents are very important. Crypto comes down to one thing. Can you prove the SMSF owns it? If you can't, that's where problems start. Next is valuation. And there is another area people underestimate. Every SMSF must report market value at 30th of June. With crypto, this isn't always straightforward. Different exchanges show different prices. There is no single official price, and smaller tokens or wrapped assets can be harder to value. So what matters is not finding the perfect number, but applying a consistent and reasonable approach. So what matters is not finding the perfect number, but applying a consistent and reasonable approach. We rely on reputable exchanges and reliable pricing sources, and we document how that value was determined. There is no one perfect price, but you need to be able to support it if it's ever questioned. And for more complex assets, yes, this process takes more time and more judgment. Now, let's talk about something most people don't expect. Crypto inside an SMSF is admin heavy, much more than shares or property. And the main reason is that standard SMSF software doesn't properly handle crypto. When a fund has multiple wallets, multiple exchanges, and a high volume of transactions, accountants can't rely on the usual systems. We have to use specialized crypto reconciliation software, import transaction data, and manually match everything across the platforms. This requires time and technical skill, which many accountants don't have. A lot more time than traditional assets. This is why crypto funds cost more to administer, take longer to process, and require a much higher level of detail. It's not just about buying crypto. It's about making sure every transaction is accounted for and can stand up to audit scrutiny. Now, before you even invest in crypto, there is something else you need to check. Your trust deed and your investment strategy. Your trust deed must allow digital assets, and your investment strategy must consider crypto properly. That includes risk, liquidity, diversification, and how it fits within the overall fund strategy. You can't just say, oh, I like Bitcoin, let's buy it. From a compliance perspective, you need to show why it makes sense for the fund and how it aligns with your strategy. And yes, auditors review this. They review your investment strategy. Now, let's zoom out for a second. An SMSF is not a crypto account. It is a retirement structure. Inside an SMSF, you can invest in properties, shares, ETFs, crypto, precious metals, and much more. The real power of an SMSF is not just crypto. It's control, it's real choice of assets, it's a use of borrowing in certain cases, and it's tax efficiency. Crypto can be part of it, but it shouldn't be the only thing driving your decision. Now let's talk about tax, because this is why people are interested in SMSFs. Inside an SMSF, income is taxed at 15%. Capital gains can drop to 10% after 12 months, and in retirement days, potentially 0% tax. Now imagine holding a long-term asset like Bitcoin and exiting in a 0% tax environment. That's powerful, but only if everything is done properly. The structure needs to be clean, the compliance needs to be right, and the documentation needs to be solid. Otherwise, those benefits can disappear very quickly. Another important point, auditors are getting much stricter, especially when it comes to crypto. This has changed a lot. Crypto is no longer something auditors are relaxed about. They want clear ownership. They want full transaction history. They want reliable valuations, and they want the proper documentation. If anything is missing, it can lead to audit qualifications, higher audit fees, and potentially ATO reporting. Shortcuts don't work anymore. And finally, the biggest issue I see is not bad intentions. It's a lack of education. People set up SMSFs, invest in crypto, but don't fully understand the rules. And a few years later, they end up with a mess. We see it over and over again. The difference is education. When you understand what you can do and what you cannot do in your SMSF, how to structure things properly, and what the ATO expects, you avoid most of the problems. So here is the final takeaway. Crypto in SMSF can be very powerful, but it's not about whether you can buy Bitcoin and super. Of course you can. The real question is, can you do it properly? Can you maintain it every year? And can you prove it to the auditor? Because that's where most people fail. If you are considering setting up a SMSF for crypto, or you already have one and want to ensure it's set up properly, focus on understanding the superannuation rules from day one, because fixing mistakes later is always more expensive. If this was helpful, share it with someone who is looking at crypto in their super, and I'll see you in the next episode.